Welcome to TradeTheNBI.com. This is John's Reporters for the 28th of August, and you can see it. We talked about this once we got right into that 2875 plus range, that the pull is automatically to push towards that, and with zero short activity, there really wasn't a whole lot stopping this. I mean, we had dropped down to this normally bullish dip here when you get to that, negative 6.2, and we had the green crossover, and green has stayed over cyan significantly throughout this, as well as above red, and now we've even got a new push with the orange having dipped below. Of course, positive extremes on this, so yes, these will get retraced, but you typically get this breakout move, it'll rise up and then usually comes back to, at least come back to that breakout point. So that would be consistent with what that dip is, but you have to wait for the actual signal to do that. And now that you've broken into new highs, you'll probably get a little bit more increased short activity, but beautiful rise in the shakeout, quite strong in fact. And perfect end-of-month window dressing for them in the middle of summer. And again, this is what we were talking about, that passing up of the summer trade where everyone's like, oh, we don't want to get out of the market, blah, 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 go away, and, selling may go, go away. But oftentimes they get burned doing this because at the end of the day, you get these kinds of pushes and then they're way behind on meeting their, at least fund managers, on meeting their percentage quotas. Particularly if they're in a lot of cash, which a lot of them are, and you still have a rising market. And there's a significant reason. The economy's growing. This isn't something that we've had in the last decade or so, and so it's going to take some getting used to for people to realize, like I said, back when Trump was elected, that this was going to be more in the vein of the mid-90s, early 90s, where it just keeps going. Everyone says, oh, keep going, it can't, and it keeps going. Because the contrary trade is it. This is also bolstering it. This power move in the euro has continued to propel it. And that's just a stabilization thing, as trade worries and that fade. But you still have systemic risk there with Italy becoming more and more belligerent as to its stance with the EU budget and everything, though I think most recognize there's not a whole lot of power there, so it's not really impacting things too much. And all we've done is gone back up to the high side of this range on a nice improvement in the shakeout and everything. So it's been a pretty solid move from early on. Bonds, again, this is an interesting one because a lot of people are with that cash flight to quality situation, but the reality is that yield that they're going to be getting from here just isn't sufficient. Now they believe that, rates will rise, but there's still this continued contingent that thinks that we're like a month away from a recession. Just complete ignoring of the data that says to the contrary, and oil is a perfect example of that. There's plenty of demand, and within that has been a very decent stabilization of price. Of course, Iran now is threatening to close up the Strait of Hormuz and things like that, and that's just a scare tactic to do what it's done, and that's elevated prices from where they were in this recent zone. If you start popping up above this, though, then it could be a bit more problematic inflationary-wise. And gold, recognizing a little bit of that, but again, like I've said, oil is the new gold trade. Cryptocurrencies we can take a look. We haven't looked at Bitcoin in a while. It had that bottoming out, shakeout improved, and then boom, it's just been on a nice little positive shakeout run from there with the cyan below red for most of the run. So it bought up on that little dip, and it should still be able to catch a nice run even from here. No reason why it won't go back to its previous highs. You still have a limited supply situation with that, as long as demand. But again, it's got to get converted into regular. But you had a lot of these other big corporate moves into it, as far as some of the big names into Bitcoin at least, and other cryptos. So positive extremes started it out, of course, so we know what those are going to be. A lot of them, and we're filled in between, except for this primary part of the move. So that will take a little bit longer to fill, and all of these early ones got filled in right through there on the little dip. And it didn't take much to fill it because the range wasn't that big, and then it started breaking out much higher during the day on a slow. It's beautiful when you look at that DOC. I mean, it's just clean as. And then when the sell came in, it's not much of a sell when you're that far above the zero line there. I mean, this was a decent signal when it took place right there with the red moving under. It just wasn't enough to produce that big a drawdown, and so once the shakeout was evened out, new signal justified to move right back to the highs. And again, even this positive extreme right here, it's filled back in. New set of them, but filled back in. So this is a pretty healthy advance in the sense that you're filling in all of these red dots as they pop in place, and you're getting the green dots right around the 50%, effectively kind of indicating an oversold right at that point, and of course gold above that 50, going right back to the hundreds. Pretty consistent and pretty clean action, so nothing we can really complain about as far as the readings go. Some people may not like that it's just straight up, but yeah, it's just a matter of following it and staying with it. All you can do is just collect it. That's nothing more. Now, of course, this positive extreme is going to fill back to the 76, and unless you see some kind of change where you're getting dramatic short strength, it's just going to continue like this. So just play what comes, and if you're looking for short setups, you're just going to have to be a bit cautious on understanding that they're going to hit support levels and probably support right on them, as people have to get back in as they start getting way behind now on yield return. So there you have it, the long and the short of it. I'll be making a couple of those adjustments for the September indicator readings on this. Like I said, I was going to change the white candle that we get on some of those oversolds to an orange color, so that the new buy setup of the NBI will always be a white candle. That was always an experimental color before, just to make it easy to see the range. But as the code is defined here, I'm able to just set the final colors, and we'll go over that in the videos to come as we continue to crank it out here. As always, though, trade well. We'll talk again later.